It's been said, you are legally required to pay your taxes, but you're not required to leave a tip. Find out in today's episode if you are potentially a big tax tipper.
Welcome to this episode of Plan Your Wealth with Purpose, Principles for Investing and Wealth Creation, with Wealth Creation's education and tax coach, Jim Fisher. James Fisher is a registered advisor offering investment advice through Signature Investments, Inc., an SEC-registered investment advisor. Dayton, Ohio. James Fisher CPA and Wealth Creations is unaffiliated with Signature Investments, Inc.
I just love that quote. Most of us like to be generous when a tip is warranted and we get good service. I've even tipped in advance to help assure good service. But giving Uncle Sam a big tax tip? Is that really what you want to be doing? Taxes are an area where many people are transferring their wealth unknowingly. You not only lose the tax dollars, but all the earnings potential on those dollars. Unnecessary taxes are like a cancer. They rob you of your lifestyle, your vacation, your kids' education, your charity, and your retirement. I love to educate families that want to do proactive planning. But today, since we only have 2 minutes, I'd like to cover some basic tax saving opportunities that are available to most people. To begin with, it first involves just becoming aware of some of these opportunities available. One example may be taking advantage of a flexible spending account, or FSA, that you may have at work. These can be used to put in tax-free dollars to help pay for medical expenses for the year. In addition, you may have a dependent care flexible spending account. These are usually used when you have kids in daycare, but also can be used if you have a qualified dependent parent in your care. These accounts are structured to use it or lose it, with only $250 being carried over until March of the next year. At a minimum, your share of your health premiums that are withheld from your wages should not be subject to tax. Ask your employer or tax preparer if uncertain. Another example may be taking advantage of a health savings account, or HSA. These can also be used to put in tax-free dollars to help pay for your out-of-pocket medical expenses. But unlike an FSA, an HSA can build up money in the account. So even if you don't spend it in the current year, it's still yours. You could pile up a boatload of tax-free money in these accounts to pay for medical expenses later, after your working years. Sometimes the amount of savings can be significant. $5,000 in an HSA could easily be between 28 to 38% tax savings. So that's $1,400 to $1,900 back in your pocket. The third area is charitable contributions. Keeping accurate records and documentation is a must. For non-cash contributions, I tell everyone, take a picture and record each item. Then go to itsdeductible.com and enter your information to get a report of the fair market thrift shop value. For Northwest Ohio folks, I warn you that the values are from national figures and seem high for our area, so I usually go for a mid to lower value. So here's an idea for you. Tip yourself. Use this method to document your giving, calculate the tax savings, and enjoy a night out on the money you would have normally tipped the IRS. These are just a few of the basic tax savings opportunities available to most, so I encourage you to take full advantage of them. If interested in doing proactive financial and tax planning, please consider giving us a call. We will dig in deeper into the tax and other areas where you may be unknowingly transferring your wealth. Have a great day, and don't be a big tax tipper.
Thank you for watching this episode of Plan Your Wealth with Purpose with Jim Fisher. For more information, visit wealth-creations.com. Also browse the other shows found right here at Toledo Biz TV Shows.